What is going on, traders? Obviously, we are in July, and it is no secret that July is gearing up to be the most important month for stocks in the short term. There are so many catalysts upcoming, of course, which we will talk about in this video and cover as they come up. We have CPI, we have the GDP numbers, we have the FOMC meeting, and of course, we have earnings season. As always on this channel, we try to keep the trading fam updated with the most current data that would affect the economy, the stock market, and evidently your portfolios and your trades. And I was taking a look at one data set today, which really might take the stock market down another leg before potentially hitting a recession and finding a bottom. Now, before you guys say that this channel is all doom and gloom, it really isn't. I'm just showcasing the news and what's going on currently. If we were in a bull market, obviously the tone would be way different. However, if you do want a more positive video talking about the benefits of investing in a recession and how that is an opportunity for life-changing money each and every single recession we've ever had, check out my previous video here. You will love it. It will give you some tips and ideas on how to invest in a recession and why you should be investing in a recession, probably more aggressively than you would at any other time. If this is the first time on the channel, welcome to The Traveling Trader. Hit that thumbs up if you get anything out of this video, and let's get right into it. So as I said, July is going to be a jam-packed month full of variables and data points that are really going to dictate which way the market and the economy are going to go. This is an ever-changing environment, and investors and traders are on pins and needles waiting to see what the outcome of some of these events are. Now, as I said earlier, we have the CPI numbers, the Consumer Price Index, which tracks inflation, coming out on July 13th. We also have the FOMC meeting on July 26th and 27th. This is going to tell us by how many basis points the Fed is going to hike rates. Most of the market is expecting a 75 basis point rate hike, and conveniently, the GDP for Q2 reading is not coming out until July 28th. So the Fed is going to make its decision before the GDP comes out. Now, this is convenient because if the GDP reading came out negative, then we would officially be in a recession, and the Fed would then be forced to decide whether they want to halt quantitative tightening due to a slowing economy, or potentially raise rates by less than 75 basis points, or keep their foot on the gas. That decision is a lot easier if they can make their decision before the Q2 GDP comes out, but we will talk about that later in the video. But right now, I want to focus on one variable that's different than all the ones that I talked about before, and that is earnings. We usually talk about earnings within the context of an individual company. However, I want to focus on the S&P 500 earnings in totality. So check this out. We want to look at S&P 500 12-month forward EPS growth, which is here in the lighter blue according to this graph. And we want to contrast that with the manufacturing new orders and inventories. So Lisa Chalette, who's the chief investment officer at Morgan Stanley, has been tracking this for a while. And if we take a look at these two things contrasted, we see that we don't really hit a bear market bottom until the manufacturing new orders and inventories cross below the S&P 500 12-month forward EPS growth. So we're already seeing a drop in new orders versus inventories, which usually happens in an economic slowdown. However, we see that this has not been reflected yet in corporate earnings. Companies' valuations have no doubt taken a hit, and we are now seeing companies look cheap, or at least cheaper than they've been in a while. We have not seen higher costs and rising inflation be reflected in future guidance of corporate earnings. So in conjunction with everything that's going on in July, earnings season is going to be one of the more important ones as well. We could see a whole host of readjusted negative guidance due to the price instability and the continued inflation that we have going on, in conjunction with demand destruction, and like you saw with some of the retailers, Walmart, Target, etc., inventory bloat. Now, if this problem is endemic across most of the big companies in the S&P 500 and the NASDAQ, then we could see the entire market fall again by another 5 to 10%. Now, you throw in the chance of a recession happening, an aggressive Fed, and CPI numbers coming in hotter than expected, and the market could fall even greater. Nobody really knows because nobody knows the outcome of these variables. But further downside, regardless of the extent, I would say is the more plausible scenario here. Now, before we get into the CPI, GDP, FOMC meetings, etc., speaking of a recession here in the US, the chance of a recession globally is a lot greater than it is even here. One developing news story that I'm looking at, especially with regards to the potential of a recession or mass defaults, is what is going on in China. China has been implementing an on-again, off-again COVID lockdown policy. However, we now have news stories that one of their major banks are freezing assets of depositors. So there are a lot of depositors, thousands of depositors, who are not able to withdraw their savings. Now, anytime these news stories have formed, regardless of country, this has led to at least a wave of defaults. Either customers will start mass defaulting because they have no access to their money, or banks will start defaulting because all of the cash that they're using for loans have now been withdrawn by the customer. Now, before I get into some of the other variables that are going to affect the markets and the economy, I want to get into this play here. So I was looking at Alibaba pre-market, and all Chinese stocks, due to that developing news story that I just discussed, were heavily down. However, they were creating this very tight range pre-market, and Alibaba is one of the more heavily traded options on the market, at least as it relates to Chinese stocks. So it was trading in this very flat line. We were able to draw the support line here at $115.70, and we said that we would buy puts if we drop below this line after the market opened. Well, you see this really clean flush here after market open. We bought these puts here, the 115 puts, as I sent out on the watch list, and we were able to bank on these puts really easily because of that clean flush move. I was actually very surprised that the levels were very clean and tight before market, which allowed for an easy play. And if Alibaba rose above that level, then we already had calls ready for the off chance that it would rally. Now, I go over how to draw these levels in the day trading course that we just launched. If you want access to the day trading course, the options day trade watch list, our analysis, our long-term plays, our cash secured puts, crypto, coaching calls, Zoom calls with me, the beginner section where you get to ask any question you like about any trading strategy. Link is in the description. Sign up, talk to one of our ambassadors in order to apply for a spot in the Traveling Trader Academy. Would love to have you. It's a great value. Oh, and while you're there, you guys always ask me about merch. We just launched these Traveling Trader hoodies. They're actually champion hoodies. So yeah, go to thetravelingtrader.com and you can actually pick one of these up right now. All right, so as I said, July 13th is when CPI comes out, and we want to see if it's going to come in at higher than 8.6% or not, because there has been this narrative that inflation might be peaking. Doesn't mean it's declining, but that it is going to be peaking for a while, and we've hit the worst of it. If inflation comes in higher than 8.6%, well, there goes that news story, and that would then lead to a conclusion that the Fed, regardless of a slowdown economy, has to raise rates by at least 75 basis points or maybe 100 basis points. It might have to get even more aggressive, which would scare the market into another potential drop. If inflation comes in lower than 8.6%, depending on how significant it is, well, the market could see some relief at least until the FOMC meeting come July 26th and 27th. Now, the market is pricing in a 93% chance that we will see a 75 basis point rate hike, and only a 7% chance that we will see a 100 basis point rate hike or greater. Again, this will depend largely on whether inflation comes in hotter than expected or not. And lastly, we have Q2 GDP readings coming out July 28th. Remember that a recession is defined as two back-to-back negative quarters. If it comes in at 0%, or less than that, obviously, then we will officially be in a recession. But as I said in my last video, recessions aren't the end all be all. If it is a deep recession, like the one we saw in 2008 or the one we saw in the year 2000, then yes, it could last for a lot longer. However, stock market gains while investing during a recession, the average gains 12 months later is 50%. You definitely want to be investing during a recession. Like I said, go back and watch that video here for some very valuable info on how lucrative investing in a recession could be. And as I said, unofficial earnings season begins right now in July. We have most of the banks reporting end of week as of the time of this recording. So Wells Fargo, Citi, BlackRock, US Bank, PNC, etc. Towards the end of the month is when most of the mega caps that people are interested in, like Apple, Microsoft, etc., report towards the end of July. And this will come right around where the FOMC meeting and GDP numbers come out as well. So a lot going on this month. Hopefully I consolidated all for you. As you know, this is the channel where we bring you the most concise, accurate, non-BS market updates. Leave a comment down below. Let me know what you think. Let me know if you are investing. I love hearing from you guys. Leave a thumbs up if you got anything out of this video. Again, if you want access to the Traveling Trader Academy, where you get access to all of the courses, including the brand new day trading course and the famous options course, link is in the description below. Sign up, talk to one of our ambassadors. These hoodies, along with some other merch, are also out, thetravelingtrader.com. So get yours while they last. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.